on gold, and I'll show you later on, but right now I have 2 levels on gold, and I'm kind of waiting, and I'm sitting on the 1 hour time frame, by the way, and I'm just waiting for price to break either 3,380 or I'm waiting for it to break 3,406. One of those levels are gonna break, and we'll base our plays off of that. Nasdaq, I missed the rest of the buy last week, but honestly, if we can't catch Nasdaq, because it's still got to go up, I feel like Nasdaq still has to get to that 23,700 level first, tap that level because there's a high up there. Once it taps that level, we'll see what price is going to do, but overall Nasdaq is on a whole like uptrend, so I wouldn't even think sells right now at all. But we'll see how the week progresses. It's Sunday, August 10th. Yeah, I mean, to be honest, you just like really you just chill. Like, I think this is the biggest thing that people like, as soon as the market opens, everybody's like all antsy and everything. So everybody's like, oh my god, let me trade. And like, you never really give yourself peace, and like, you literally just want to chill, sit back and relax, do something. Like, I'm obviously making a YouTube video, but you want to be able to do something, you know, just like overall chill and relax. Get ready for the next day. Get ready for New York session or London session, whatever session you trade. Me personally, I like New York. Just sit back, vibe, twin. Just vibe. Have fun, bro. Like, the journey it's gonna be hard, but just relax, bro. Like, you're in the right hands. If you're watching this video, you're in the right hands. So I'm telling you to relax and just calm down and just vibe. Just be chill. Set your alerts. I set 2 alerts, and you just wait. You literally just wait. There's nothing else you can really do. You can't force price to move wherever you want it to move to. You just gotta wait. So I think that's the biggest thing that people like. One of the biggest things that people kind of struggle with is like, they don't know how to wait, bro. Just calm down, just wait, bro. Anyways, yeah. So I'm back home. I'm back in ATO, and yeah, I mean, I think I'm gonna do a trip Friday. Well, I already have my assistant book it. I have a trip to Miami Friday coming up, and I really kind of want to, you know, smack the charts up and get some good gains this week so I can use it for Miami. Cause hey man, I think I might be back in that mode. Alright, so today guys, I'm gonna just break down everything from the basics. Once again, just kind of give a refresher of everything. So the biggest thing that people kind of mess up with is like, remember, I personally only use the 4 hour when it is necessary. So if like the 1 hour isn't looking too clean, normally I would use the 4 hour time frame when the 1H isn't clean. And that just basically means whenever I say clean or not clean, it just basically means that you can see the structure, right? And I'm gonna be pretty fast because I've already explained this multiple times, and today I cannot spell, so yeah, we got that. So see the structure, that basically means it's clean. So you're able to see the higher highs, you're able to see the higher lows, you're able to see the lower highs, and then you're able to see the lower lows. Yeah, lower lows. This is the only structure that you need. So the higher highs and higher lows only happen in uptrends. Once again, I want you to remember this part, uptrends, right? So if you see a higher high, when price is going down and you see a higher high, I want you guys to say in your head that the trend is changing, but only above this level, right? I want you guys to remember that. So wherever that higher high breaks, so if the higher high is made, whatever structure it broke, anything above this level is now bullish. I want you guys to remember that for sure. Anything above this level is bullish. So remember, higher highs and higher lows only happen in uptrends. If you happen to see a higher high or a higher low happen inside of a downtrend, I need you guys to start preparing for possibilities of price building up and, you know, continuing an uptrend or making an uptrend. You can also see a higher low inside of a downtrend too, and it will look like this, where you see a higher low, and then this will be a breaker structure. So it's only an indication until price comes above this level. But normally when you see that higher low made here, price is already looking to go bullish anyways. So once again, you're not supposed to see a higher high or a higher low inside of a downtrend, right? So this is going to be our lower high currently, right? So this is our lower high. And then price tries, so this is the low. So we have lower high here too. And then we have lower low. So we have lower high, lower low. Price goes and makes a lower high. It's supposed to make it's supposed to make a lower low. So I want you guys to remember trends are consistent. So this is also a thing. I'm gonna just type everything that comes to my head. Consistent. Why can I not spell today? Consistent. Yo, I cannot spell today at all, but trends are consistent, right? Trends are not supposed to, oh yeah, that's right. Trends are consistent. You're not supposed to see, you know, a lower high, lower low, lower high, higher low, because that's not consistent. It's supposed to give you a lower high, lower low, lower high, lower low, lower high, lower low. When it's ready to change, then you'll see a higher low, or you might see a higher high. Whichever ones comes first, you're not supposed to see any of that, right? So higher low, higher high, uptrend, and then you have downtrend, which is lower high, lower low. And it's the same way, it's vice versa. So this is downtrend, obviously. So we're going to put downtrend. So if we're looking for a downtrend, well, we already have one marked out here, right? And we don't want to see, you know, those higher highs and higher lows. But let's say if we're in an uptrend this time, right? So you'll see higher high, higher low, higher high, higher low. But the moment price fails to make a high, this is already giving you signs of price being bearish. Doesn't mean it is bearish, but it's giving you signs of being bearish. What helps with just overall knowing where price is going, or the trend that price is going to choose, is when it breaks the highs. So, or it breaks. So if you're looking for a uptrend, you're looking for a high to break. So let me write that down for you. Or let me say it this way. If you're looking for buys, you need a high to be broken. And then if you're looking for sells, if you're looking for sells, you need to see lows broken, right? Because that continues the trend, right? Sorry. That continues the trend. So in this case, we do not know, just because we do have this higher low doesn't make price bullish. What ends up making price bullish is price breaking above the high. So this was a lower high, which is an indications, or these are structures that are telling us price is bearish, and it becomes bullish once it's above that level. So once it breaks that high, this is when price becomes bullish, and anything above it has bullish potential, right? So with that being said, just remember, this is just giving you characteristics. This is giving you clues. This is letting you know, hey, price has potential to, you know, buy up because we're making a higher low, right? This doesn't mean just buy off of this. If you want to be risky, you can, but you don't want to do that, because this could sometimes set up to make that another lower high and then continue down, which is why we don't go based off this low already. We don't go based off this higher low. We need that higher high to confirm, right? And then once it's confirmed, sometimes you can enter without that indication, but it's always good to see where price is going to go that first breakout, and then most likely is going to give us that correction, and then later on we take it back above this level. So our entry comes from when price is back above that level again, and then we take it from here. So like you see how price broke the first time, we're entering at that same level once price comes back above it, right? So with that being said, same thing with uptrends, right? If we see a lower high happen in the market and we're like, oh, price made a lower high, we're not going to instantly sell based off of this. What we're going to do is we're going to wait to confirm that price is going to go bearish, because Now we know anything below this support level, below this low, this swing low, is going to be bearish under this level, right? We know anything under here. So only under. Price cannot be added. Price can't be above it. It has to be under this level before you start to place that sell. The only way that you could place a sell early is if you have other bearish structures, which you're most likely going to have, which you can sell off of. So you'll see like this will be like the 4-hour time frame that we're on. So all my diagrams that you see right now, all the lines and the pictures I'm trying to show you, this will be on the higher time frame. So everything that you see on the screen is going to be looked at on the 1 hour or 4-hour time frame. So everything I'm showing you, this is what you're looking for on the 1 hour or 4-hour time frame. You're looking for these structures, right? You're looking for those. If you don't see them, then it's not there. Some of you guys try to mark up things when it's not there, and then you guys be wondering like, oh, ICC doesn't work, or you guys be like, I don't see ICC. If you don't see it, then it's not there. Stop trying to make things be there. Wait for things to happen. Wait for price, because it's going to be clear as day to you when it is happening, right? Some of you guys are trying to find things and it's not there. Some of you guys are trading pairs that barely move, and you're like, oh, well, I don't see it. It's not going in a trend, or it's not making higher highs or higher lows. Trust me, price is making higher highs and higher lows, but it needs to be consistent. So overall, you need to be looking for trends that are consistent that you can basically take advantage of, right? You want consistency over just random movements, right? So with that being said, we know anything under this level is going to be bearish, which is why we have lower high here, a break of that low, and then we're going to also have that indication, the correction, and the same thing as we said with the buy. So our indication, our correction, and then the continuation back down, which then will target the next low level, which will obviously be here. Also as well over here, if we're buying and we're buying above this level, we would just target the high. So it will either be this level or this level. And it's most likely the indication. So if the indication comes up this high, that will be our target. But overall, you would just look for price to just stay bullish above this level, target the high, and continue the trend. Because remember, trends are supposed to be consistent. So if you're in a trade here and your TP's here, that's the high. If price gets here and fails to go any higher, that's letting you know that, okay, you know, sellers are sitting at this level. Maybe I should get out of my trade because sellers are sitting strong. But the moment it goes above that level, you know that there's no more sellers and you can just hold to the next level. So that could be over here, and you can hold to that next level and then rinse and repeat the same thing. If price doesn't want to go any higher, most of the times this will be this new indication, which some people kind of forget to understand. If we're trading the trend and you've already surpassed your TP, you're on to a new indication. So you're in a new indication. Your position can be like right here. Your position can be right here. And you're taking it up, and this is supposed to be your TP, and you're taking it up, and then you hold for more, and you're swinging for more. All this now that you've caught later is just the indication for the next move. So you're still holding the trend, you're still in the trend, but just don't be aware that that indication can correct back to the previous support level or back to anywhere it wants to. So just keep that in mind, because I don't think I stressed that one enough, but keep that in mind for the people that are trying to hold trades. You got to remember, what is that long-term goal? It really helps to be on the 4-hour for like a bigger picture for everything. But if you're a beginner, try to just make that first TP and then, you know, hold some partials until you feel like closing. But if you guys are trying to hold way longer trades like me, just remember that when you've surpassed your TP, you're on to a new indication. There will be a correction in the market, and then there will be another leg up. So it'll be another push up. So just always remember that and have that long-term target. So this could be that long-term target that we're looking for. And most of the times price will look like this. And you just want to target every single level that sellers could potentially be at. So if you think sellers are going to be here, this is the level that you need to be targeting, right? So with that being said, you hold until price gets to that level, because not even most of the times, price is going to get to that level, because these are buyers. Buyers are going to run out of steam, but the only way they're going to run out of steam is if they have competition. Sellers are the competition, so they have to, keep pushing, and then once they run into the competition, then that's where your TP is at, right? So once again, if you're buying, you're going to sellers, and if you're selling, you're taking it to buyers. And how you remember that, right? To make it easy for you, for all my brand new traders, support. This is where buyers are. And then what was it? Resistance. This is where sellers are, right? Keep it simple, nothing else. Literally keep it simple. Buyers are at support, sellers are at resistance. If price breaks support, I feel like I just got to write everything down for some people. Price breaks support, no buyers. That means there's no more buyers at that support level, right? Price breaks resistance. That means there's no sellers at that resistance, right? No sellers at that resistance. So if price breaks support, there's no buyers there. So anything under, so if it's under support, then it's bearish. Only under there. It's bearish only under there. And then if price breaks above resistance, above that broken, or I should put it like that. Above that broken resistance, only think buys to the next level. So I'm gonna put it that way. Sorry for my typos today. Same way with this. I'm gonna go ahead and just change this for anybody that needs it to be changed. Let me come here, boom. Below that broken support, only think about sales under it. All right. So this is just basically the basics, and you're using all this on the higher time frame. The only time you need to go down to the smaller time frame, once again, just kind of copy this down, and just like, take a picture of this, or, do what you need to do, take a picture of this, and I'm gonna show you what you need to do to get the entry, right? So we're marking up on our 4-hour time frame, our 1-hour time frame, and we're overall, looking for what is the trend. The biggest thing about being on the higher time frame, and the only thing you should be on the higher time frame for, is what is the trend? Or actually, there's two questions. What is the trend? What part of the trend are we on? Two questions. That's it. Keep it simple. You hop on the charts for Sunday, Monday morning or something. The first thing, you hop on this 4-hour time frame. You hop on that 1-hour time frame, whichever one looks clean to you, right? If you can't see much on the 1-hour, go up to the 4-hour. Start from 1 hour and then go up. Work your way up. I don't know who made this like work your way down thing, because the daily information is not even that important to you. Like, people go based off the wicks and candles and all this and that. You don't know how that candle is going to end off. So you can't go based off like just what the candle looks like, right? You can't judge a book by its cover and be like, oh, it looks like this, so I'm gonna just assume that it's gonna be this. Because most people, they'll get on the charts and they'll go to the daily time frame, and the daily time frame will have like a small wick to the upside or something. So then they'll be like, oh, it has a wick to the upside, so let's assume that it's going to sell this week, or sell, this month, or whatever the case might be. Do not judge trading by its cover. Do not judge a book by its cover. Let price tell you what it wants to do, and you follow what it wants to do. You do not try to assume anything. Stop judging things by its cover. People judge too much, and overall they don't even know like what it's about, what something could be about. It could be a trend. And I'm even talking about people judge other people by their cover, and it's like, you don't even know if that person's a nice person, a mean person, whatever. You have to talk to them, analyze them, and get a better understanding of them before you can judge somebody. So the same thing with the charts. You cannot judge the charts based off what the candles are presenting to you in and I guess you can say like a longer term. Like you cannot look at the daily and see a wick and be like, oh, it's going to sell for this week. You have to see the structure. The structure is the facts. The structures is the characteristics of that person, or that the chart that you're trading, the pair that you're trading, the asset you're trading, right? The structure is presenting you the facts about that or about that trend or about that asset, right? So first of all, or just all in all, what is the trend? What part of the trend are we on? Go to the 4-hour time frame. First start off at the 1. If the 1's not looking too clean, or you really want to see where the overall direction is, skip to the 4-hour, right? 1 hour, 4 hour. This is all you need right here. I'm gonna literally tell you all the time frames that you need, right? Boom, delete, 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 delete. This is what you need. 4 hour, 1 hour, 15 minutes. That's it. Nothing else. That's it. Keep it simple. Literally make your chart 4 hour, 1 hour, 15. That's it, right? Boom. You go from there. You start from the 1. Okay, the 1's not looking good. Let me go to the 4. Okay, the 4 is giving me a trend. It looks like it's an uptrend. So let me go back to the 1 with the same mindset. The 4 hours in a downtrend, or like, no. The 4 hours in an uptrend, right? So let me see if I can find some characteristics on the 1 hour that shows me that price is on an uptrend, right? So then you start trying to pick what levels would make price into an uptrend. So if the 4 hour is like this, boom, we know price is in an uptrend. The 1 hour could be like pushing down a little bit. So this can answer a question for us. What is the trend? Uptrend. What part of the trend are we on? Downtrend. We're in the correction phase, right? And how do we know it's in the correction phase? Because we can see that price broke out of a level. So we can see price broke out of this level. This is an indication. Indication, once again. Indication is when price breaks a swing low or swing high. Boom. That's our indication. And that's when price does this, break above this level, right? Indication. This whole move, the indication. This is telling you in this direction price is trying to go, but only if it's above this level. So only if it's above this swing high, right? So with that being said, since we have that, we now know, okay, that is our indication. What makes this a correction? Oh, we need to pay attention to that. That's good right there. That's good right there. We need that gold. But yeah, we are on the correction. We know that price came up to a level. So how do we know it's a correction? Price came up to a level after the indication was made. Price came up during the indication, and then it went into a whole nother direction. So now we know price is correcting because there are sellers sitting here, right? So price is buying, it hits a level of sellers, and it starts to sell. We're in the correction phase. So you're probably like, Sire, okay, I know what the trend is. I know what part of the trend is. How do I enter? So this is actually where you're going to scale down. You're going to go from the 1 hour or 4 hour time frame. You're going to scale down. So since we already knew the uptrend was on the 4 hour time frame, we scaled down to the 1 hour time frame. So this blue line, I'm going to make this blue. So let's do it this way. Black equals 4 hour time frame. And then we're going to do blue equals 1 hour time frame. And then we're going to do red 15-minute time frame, right? And we're going to do it this way, right? Because there's no way you don't get it after this video. There's no way. There's no way you don't get it after this video, right? We're going to do it like this. I'm going to delete this. I'm going to put this over here so you can still have it. So 4 hour going up in an uptrend. Boom. We see the uptrend. We see there is a indication above this level. We can see that price has been bullish above this level. So we're looking for buys above this level, right? But we need a correction. We see that price is high, but we don't want to buy up here. Obviously, that would be stupid to buy up here, right? That's literally the stupidest thing we could do. So then we wait for some type of correction. So basically what we're waiting on is price to reach a certain level, and it starts having a reaction at this level and then starts to push back down. So then we're looking at this and we're watching it push back down. And realistically, if you already know the trend is a uptrend on the 4-hour, sometimes you really don't need this 1 hour, but we're going to use it just so you can kind of know. But the 1 hour is going to be pushing down. That 1 hour is going to be pushing down. The 15-minute is also going to be looking like this. So I'm going to actually delete this this 1 hour time frame, and we're going to go to the 15-minute so it makes sense for you. Oh, I'm actually going to the 15. Sorry, force a habit. So now the 15-minute time frame will be looking like this. So do not picture this as the 4 hour, because we're not talking about the 4 hour time frame, right? Like, stay with me. We're not talking about the 4 hour time frame right now. Look at the colors. This will be what the 15-minute looks like. The 4 hour is just going to look like this. You're just going to see this. You're going to see this on the 4 hour, and it's going to be black. Boom. You're just going to see a straight candle down. But inside this 4 hour candle, this is what that 15-minute is going to look like, right? The 15-minute is going to be breaking down. It's going to look like this. So once again, do not get confused. There's no way you get confused. Stay locked in, bro. I'm teaching like a kindergarten teacher. You should not be lost. You're smarter than a 5th grader. With this being said, this is the 4 hour time frame. 4 hour makes a new high. We scale down. The 15-minute is correcting. The 15-minute is correcting. All we're waiting for is price to stop on the 15, break structure, and start building those highs again. And once again, we're looking at this on the 15-minute time frame, right? Boom. We see that price broke here. Boom. This is telling us, okay, we have a higher low, a higher high. We're above that level where price gave us bullish potential the first time. It can sometimes even come down here. It can come all the way to here. Whatever the case might be. Somebody's car alarm is going crazy. But you're overall looking for that correction. Most of the time, corrections will try to push back to the original level that it broke out to, and then grab even more liquidity if possible. Or it can just retest that level, whatever y'all want to call it. But overall, all you're doing is waiting for that 15-minute time frame to go from that correction structure. So whatever the correction structure is, so if you're in buys or if you're looking for buys, the correction structure will be bearish. Matter of fact, let me write that down for you. If you're looking for buys, the correction structure, can I not spell today? Okay, I just can't spell today. Sorry, guys. Structure will be bearish on the 15-minute. So if you're looking for buys, higher time frame, so 1 hour time frame, 1 or 4 hour time frame. Once again, you can use this on either one. It doesn't matter what time frame you use, as long as it looks clean to you. And what I mean by clean is you can see the higher highs, the higher lows, right? So if you're looking for buys on the 1 hour or 4 hour time frame, the correction structure will be bearish on the 15-minute time frame. So you will see bearish, once again, for the people that don't remember, bearish is lower lows, lower highs, right? You see the lower low, lower high, lower low, lower high, lower low, lower high, lower low, breaks. What did I tell you earlier? If it breaks, you should start thinking above this level. So only buys above the level that it broke. If it broke this level, you should not be buying under here. You should only buy when price is above the level that it broke before. So if it's still above this level the whole time, most likely price is going to need some volume to push it, but it's going to buy above this level. Anything above this level is going to buy. Do not buy when price is under the level. So if price broke it and it came up, don't fucking buy under here. That doesn't make any sense. Wait till it comes back above that level. And if it doesn't, then just charge it to the game. That's just not our trade. It's not doing what we want it to do. So move on. Stop trying to force trades out of just nothing. Like, stop trying to force it. If it's not doing it, then don't take it. But do not be buying price when price is like doing all this movement under the level. Once it gets above this level, this is when you place your buy. You put your stop loss under this level right here because that is that last low. So you put your stop loss under this level where my red line is at right here. And you buy when price is above here. So where my red line is at, this is where you buy. And then overall, you would scale back out to that 1 hour, 4 hour time frame, and you look for that overall swing high. And then you target that level and you wait for price to give you that momentum. Same way with being, so if we're talking about the uptrend, it's the same way with a downtrend. Nothing changes. Stop getting confused and thinking, oh, because we're selling is different or because we're buying is different. No, it's the same thing, same structure. You're just looking for, and in an uptrend, all you're looking for is the 1 hour, 4 hour to be bullish. And then the 15-minute goes on a correction. And once it goes on that correction, all you're doing is waiting for the 15-minute to break structure and go back bullish, because then price is showing you 15-minute is going bullish. If price is above that level, so if price is above the level where you've seen bullish on the 4 hour time frame, if it's above that 4 hour zone, then you take that buy, because overall the 15 minutes changing, the 1 hour is going to be changing, the 4 hour is going to be changing. So 4 hour, 1 hour, and then scale down to the 15-minute, wait for the 15-minute to get done correcting, break structure, and then take the buy right here, right here. Because the 15-minute is obviously going to make that first push. It's going to have some type of correction, and then you're trading anything above that level along with the New York volume or whatever you trade, whatever the case might be. So I'm going to show you what I'm looking at so you can get an example what to look for as I trade, right? So as we've seen, gold actually gave us an alert. So boom, prime example, right? We do not trade this, right? We do not trade this. 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 I got to keep saying it over and over. Do not trade this part. Do not trade this part. You see how we have this level. This is our highest level. This is our swing high. You see price made that swing high and then it made a swing low. So this is our high and this is our low, right? High and low, right? And you can see that price was maintaining structure, by the way. So we have this support is getting higher, it's getting higher, it's getting higher, boom, it's getting higher, and then it's getting higher. Obviously right here is getting higher. And then look what happens, we break. So this is our indication to tell us that price is becoming bearish. We do not trade this because price is going to make a correction in the market. It can be back to this level, it can be inside back into the zone, or it can even be a small one. But price is going to make a correction for us to utilize to be able to catch this trend. Because if price is actually trending, so if price is actually in a downtrend, you're not going to be left out of anything, right? You're not going to be left out. So stop feeling like, oh, I'm not in this trade, or I'm not on this candle right now and the candle's going down. Oh, I'm not in it. I'm gonna miss the whole move. If price is going to go on a downtrend to a direction, you're going to have there's going to be multiple opportunities to catch inside of a trend. Trust me, there's going to be multiple opportunities. So for people that don't know, all I'm seeing is price was maintaining uptrend. It was maintaining the uptrend structure. And we made a high, made a support, or you can say swing low, swing high, however you want to say it to make it easier for you. And then price broke it. See how it was respecting it the whole time? It was respecting. Minus all the nonsense that was going on, like with this high, and then it sold, and then it made a high again, and then it sold all the way deep, and whatever movement this was, just overall, it maintained its support levels. So remember what I said earlier, for us to say that it's bearish, it has to break the low. And for us to say it's bullish, it has to break the high, right? So with that being said, as you can see here, price made a high and then made a low, but it didn't break the previous low. And then it went up again. It didn't make a new high, but it also didn't break the previous low. So this would have been just not trading at all, right? And then we can see price builds up again, makes a high. So that tells us above this level, price is going bullish. So above here, price is going bullish above here because it makes a high. And then we have another lower high, another higher low. and then price pushes again, makes a high. So this is overall showing us price is bullish, maintaining structure. And then we have that break here, which is, this is our indication. And you see how price is reacting? You see how price is reacting to this level? In my head, I won't go based just off this candle that's open because it can keep going down. But let's just say I'm using this for an example. Let's say it wants to stop here. So now we know if price is under this black box, we know price is going to sell all the way to this level because there are buyers sitting here. Buyers sitting at this level, and you can see how price is reacting. If price is selling and you see it retracing or coming back, that's letting you know that sellers are at this level. I mean, buyers are at this level. My apologies once again on my words. If price is selling and you see it's retracing and reacting a certain way, that's letting you know buyers are putting up a fight at this level, and they're pushing, they're pushing, they're pushing, they're pushing, they're pushing, they're pushing, they're pushing. And they're trying to make it push back because buyers don't want price to go any lower than this. So then this is why we don't trade that, because normally price is going to give you a structure where you'll see this one candle push down at a certain level, and then you'll see it kind of slow down on the second candle. It might give another red candle, and then you start seeing it push back up and continue back up. And those are those green candles, which you will most likely find on that 15-minute time frame where you see price building back up. So I'm gonna scale down to that 15, right? We only have one 15-minute candle, so we can't really judge. So right now, all we're gonna do is go based off what we see. Boom, delete all this. We're not gonna overthink anything. We're just waiting. And this wait is probably gonna take a few hours. So you just gotta sit here and wait. Literally just sit here and wait. See what price is gonna do, because we cannot trade the breakout because we don't know what direction it's overall going to go. We know that price broke support under this level. We see that price is bearish now. We're going to wait for a correction in the market. Once that correction happens, so since we're on a 15, we're going to see some lower highs, or we're going to see price build up. Most likely you're going to see this on the 5-minute time frame. With this setup, you're going to see price trying to build back up on that 5-minute time frame, and it's going to come to this level, and then the 5-minute is going to break down, just like how I explained on the 15. It's going to do the same exact thing, right? But overall, let's kind of let the day progress so I can explain better, because it's easier for me to show you than to just kind of say like, oh, this is what I think is going to do. I'm going to show you guys when it happens. So as we're watching this on August 10th, 9:15, price has broken this level of support. This doesn't mean that it's strictly just bearish, like, oh, that's the trend, but we have an indication that price under this level can be bearish, right? So then we wait for a correction in the market, and once the correction is done, it can correct all the way up to here, because this looks like the last level of sellers that price reached. So you can see price came up to this level and then it started to sell from that level. So this lets me know visually, I can see that sellers were sitting here and not letting price go any higher, right? So just keep in the back of your head as well, price is always trying to move in one direction. And the only way that price is going to be stopped from moving in one direction if there's a strong level, right? So if there's a strong level of something, price is not going to go. That lets you know that there's something there and price is not breaking it. So there needs to be more money grab, and then price is going to break it. But it's not breaking these levels for no reason. If price is showing you, hey, I'm not trying to break this level, or I'm not breaking this level, this lets you know that there's a strong level of buyers or a strong level of sellers here that's just not letting it pass. So do not forget that, right? Do not forget any of that happened. All this resistance up here, all this right here, this rejection, this is only telling me that sellers are pushing price here and they're not letting price come any higher than this. Same way with this level. Price here, we see 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 this wick here. Price wasn't trying to go any lower than this. Price was not letting, this zone was not letting price go any further down than this. But now, since we have that break, this lets me know that anybody that was sitting here trying to keep price from going any lower, they are now gone, right? So now anything under here is just sales. So we'll wait for a correction to confirm everything, because this correction is honestly just to make another lower high. Because once we have that lower high in the market, we can see that price is now bearish because we have lower highs. So we're just adding on to confluences. We know price is bearish under here, but instead of just taking the sell here and trying to hold all the way through, we know the correction is going to happen. So we wait for the correction, which is going to make a lower high. And then once it makes the lower high, we take it back down under this level, and our position will be here, right under that level. And then our stop loss will be above that lower high that was just made. You can give it some room, but that will be our position. Like I said, I'm back to the daily vlog. So we're going to be tracking price on gold and NASDAQ. If I get back on NASDAQ, I'm gonna go ahead and play y'all the video I made the other night on just basically NASDAQ and how I was able to catch the buys in the reversal. But overall, I hope this whole like session was able like for you to learn and kind of get a better understanding. If you didn't understand, I tried to explain it in the most simplest way possible. I constantly try to think of new ways to explain it. But honestly, guys, like this is the best way I can explain anything. Like you at this point, you would just have to chat GBT what I'm saying and like just put it like, yeah, you would just literally have to put what I'm saying into chat GBT at this point if you don't understand it. But all we're doing is going to the 4-hour, 1-hour time frame. You can, or let me make it easy. All you're doing is going to the 1-hour time frame, determine what trend it is. Once you determine what trend it is, you determine what part of the trend you're on. So like right now, we'll go to the 1-hour. We would say price is breaking structure, or we can say price is now trying to go for a downtrend, but only under that black box. So let me not make it confusing. Let me just make one black box. So you just not confused, because people will like get so confused easily. We have one black box. Anything under this black box is bearish. So that is our trend. We're looking for anything under this level to be bearish. That's it. What part of the trend are we on? Okay, if we think the price is going to be bearish, if we think the trend is bearish, then what part are we on? Okay, looks like we're on the indication part. I don't really see too much, like price still has potential to go down. It doesn't have any strong green candles pushing it up. So it's just kind of rejecting. The buyers are trying their best to fight. We have 40 minutes on this candle. Price could do anything in 40 minutes and come with some more momentum in these next 40 minutes. But once that candle closes, that's the closed deal, wherever it's at, right? So this is our indication. So now we're just waiting to see if in the next 39 minutes, is price going to push either further, or is it going to stop here and then start heading back up? Because then that would be our correction, right? So we wait, see what the candle does for this overall like just movement right now. We wait those 40 minutes, see what price is going to do. If the next candle continues to sell and doesn't buy up, then price is still on that indication move, right? The moment you start seeing strong green candles in this situation, that's when you should be thinking price is on the correction. And most likely that'll be on the 15-minute time frame. We'll just be building back up like this. So you'll see price build those higher highs and higher lows on that 15-minute time frame. All you're doing to get your entry is you're waiting for price to show you that price is going bearish, which is going to either give you that lower high first. So this is that lower high, and then the break of a lower low, which then that lets you know price is bearish, or it's going to give you the uptrend, and then it's going to give you the break first, and then the lower high, and then another push down. It might look like that. So hope this helped you overall. Let me explain NASDAQ for you guys, so stay tuned. Hi guys, welcome back. As you can see here, how I found the reversal on Wednesday was that we had that sell-off, and we can see that the sell-off is here. So you can see that price ended up selling off. The reason why it sold off is if we scroll over here, a couple of days ago, we had that sell-off here, which ended up making that low down here, and then price ended up correcting. Price ended up correcting. We can see that price went on that downtrend for New York session. New York session is obviously the blue zone. So with this being said, everything that happened, we had a lower high, price ended up selling off from it and then causing this swing low. Once it made this swing low, we ended up pushing up a little bit and making a lower high. This high is lower than this one, right? Makes it a lower high. Price is still bearish. Then price ends up selling just a tad bit, and then making this level of support before shifting back into a different direction, right? Shifting back into a different direction, and you can start to see it build up. This is previously before New York started. So this makes this a higher low. Why? Because this swing high, this swing low is higher than this swing low. So this is a higher low. So now remember what I said. Price is either going to do one or two things when it changes trends. When it comes from bearish to bullish, this is how you would spot it. You will either see the lower high, lower low, lower high, lower low, and then you will see a higher high, and then the higher low, and then price reverses. Or you might see a lower low, lower high, lower low, lower high, lower low, lower high, higher low, and then a trend change with the higher high, and then another higher low to finish it off to continue go higher, you know? So with all this being said, I don't understand what you guys are not understanding. Some people don't understand. They get very confused for some reason. And I explain everything on a kindergarten level. So I'm not really sure like how else to explain it any easier than this. All I did was I'm looking at the swing points. Price goes into one direction, it gets to one point, and then it goes the opposite direction at very crazy force, right? Even if we look at this, we can see that once price got here, something, and when I say something, I obviously know what it is. Sellers, obviously, but for some of you guys, something, you got to look at this and be like, something made price move. What was it? Obviously, the answer would be sellers. Sellers came into the market here and made price move. I don't know what's so hard to understand about that. We can visually see. We can literally see it. Like, I don't know how you're not understanding it, but we can see that price gets to that point and then it shifts into a whole nother direction, right? This whole time it's shifting a little bit, but not too crazy. But as soon as it gets here, it goes into a whole nother direction for the next couple of minutes. Not even a couple of minutes. I think that's 2 to 3 hours. Yeah, somewhere around that. Yeah, from like almost 3 to 4. Yeah, that's like almost 3 hours. So anyways, comes here, makes that lower high, makes the lower higher low, because this low is higher than this one. All we did was session came in, we start seeing price come up, right? You can scroll down to that 15 if you can't get a clear visual. We go to the 15. We can see on the 15 that price was building higher highs above this level. So now we know anything above this level is bullish. So we have that high, price corrects. Then we can get back into our trade before session starts, before that 9:30, or we can do it during 9:30, whatever your case is. But most of the times when you're as long as you're trading in this blue zone, so if you want to use sessions, once again it's going to be Sessions Junior FX Addict. But this blue zone is basically New York, and then you have 8:30, which is mostly news sometimes. So we have price back above this level. So above this level, right? And the reason why we're saying above this level is because we can see that price was on this downtrend. It was on this downtrend, and then price ended up breaking above that lower high that price had, pushed up, made a higher high, and then we have another higher low. So now we can see that obviously price is getting higher and higher where we put our position. So if you was to enter around this 8 o'clock mark, it will be like this, stop loss under this level, and then you'll obviously go to the 1 hour time frame, 4 hour time frame, whichever one you want to use, and then you will scale up to that next previous high, which is this level, right? So scale back in, scale back in, and show you the rest. So from here, all you need to do is understand that sellers are here, buyers are here, right? Above this level, anything above this level is bullish. I'm gonna go ahead and delete this now since you understand the position. So even if you didn't enter it at 8, watch this. Price, 9 o'clock, 9:30. New York session opens, breaks this swing high. So that swing high where you know sellers are at, it just got obliterated. Buyers took them all the way out. But buyers trap in a lot of gamblers. It traps in a lot of breakout traders. Breakout traders are taking this. They're like, oh, gotta get in, gotta get in. 9:30 open is going straight up. Boom, they get in. They get swept. That's their day. Their day just got ended in less than like 20 minutes, right? Less than 20 minutes. They already lost pretty much what they was going to risk for the whole week. They're out. This is our indication for us. For us, this is our indication. It corrects, takes them out the market. Corrections are normally to take out liquidity. Liquidity are just gamblers. Just think of it as gamblers, taking out the gamblers. Boom. Takes them out. Comes back above that level that we know price is bullish above, because we already have that indication telling us above this level price is bullish. Don't overthink it. Don't overthink it. If price breaks a high, it's an indication, and you need to look at everything above that high as bullish. Don't overthink it. Stop overthinking it. You're overthinking it. Look how price came to this level and sold. So anything above this level, we know that price is going to be bullish because we can see that price sold from this level. Don't overthink it. Just keep it simple. Simple. Literally just keep it simple. So with that being said, above this level, I was able to get an entry here and look for price to push up higher to that 1 hour level that I was talking about. And then as you can see, current price is still bullish. We have price above this high, so we can see that price ended up making a low, a lower high, a higher low, and then look what happened. So once again, back to what I was saying, when you start seeing that lower high, you might get that higher low, which changes everything. So now this is no longer bearish. Breaks above this lower high, so now these highs are higher than the previous one, which is bullish, and I'm pretty sure price is going for this high right up here. So with all that being said, do not make it complicated. Literally trade in session, trade based off the structure that you are given. Do not try to predict anything. Trade off the structure that you are given and keep it simple, right? Hope you guys have a great day.